Hi everyone, and welcome back to the channel. Since mid-2022, we've been hearing that there's going to be a housing crash in 2023. Some of the largest YouTubers are putting out a lot of videos and saying that this is going to be the largest crash of our generation. One of the main YouTubers saying this is Stephan. So, is there really going to be a huge housing crash in 2023? Well, let's look at some of the facts and let you make your own decisions and come to your own conclusion. So the first thing we want to do is look at some data, and the best place for that is looking at Redfin. Now, if you look at this chart, Redfin is showing that housing prices are up 2.6% year over year, and that the median housing price is about $394,000. One thing that stands out here is that the number of homes sold are 35% less than they were a year ago today. This is really important because if you're looking at housing prices compared from July and now we're looking at November prices, you're not going to get apples to apples comparison. Most people know that October, November, and December are the slowest months in the housing market. So some people will look at this chart and show you that July is actually higher than December, but if you look at the year over year amount, it's actually up 2.6%, but the amount of houses being sold is down 35%. So we're going to talk about that and know why that's really important to look at. So the one piece of information that I've showed you shows that housing prices aren't quite coming down yet, but there is one major thing that could cause them to come down, and that is mortgage rates. Now, the people that want to scare you and get you to click on their clickbait titles are actually saying that these mortgage rates are going to cause houses to drop by 50% in this next housing crash. And as you can see, mortgage rates have gone up 3.7% in the last 12 months, and that's a lot. Something else to note here is that people can afford less and less of a house because their payment would go up a ton on a new house. These rates have gone up 3.7%, and that's a lot of money for people. So they can't really afford the same house they used to be able to afford because the interest rate is so much higher. That's something really important to note. While mortgage rates are really important and something we need to focus on, and we did just discuss, there's something else that's actually keeping the housing market from dropping a lot, and that's the supply of houses available for sale. Remember just a little bit ago we said that there's 35% less houses for sale than there were 1 year ago? Well, that's actually affecting the market a lot. It's making it so there's less houses there and the supply is just not there for the demand that's available, even though mortgage rates are really high. So before we hit on the prices of houses and if they're going to drop by 50% in 2023, we need to understand why the supply is down so much and what happened from 1 year ago that the supply is down by 35%. The number one reason that there's less houses on the market today than there were 1 year ago is again because people cannot afford to buy bigger and better houses than what they currently own. Interest rates are very high, and most people are locked into rates that are a lot lower than today's current rate, which is 6.2%, and that's as of Friday. And it's actually dropped a lot on Friday by 0.3%, so it's actually at 6.5%. Remember, this rate is if you have really good credit and you have 20% down. It is not where most people are going to be, especially first-time homeowners that are only going to be at about 5 to 10% down. With this hike in interest rates, it just doesn't make sense for current homeowners to put their houses on the market. They'll afford less house and get a worse house than they currently have. And that's why there's a 35% decrease in supply. And unfortunately, I don't see this problem getting any better. This problem isn't getting any better because there's not enough houses being built. If you look at this chart, you can see that there has been an increase in houses being built. But since August of 2022, things have really flattened out. If this housing production does not increase by a lot, we're still going to have an issue with supply and demand, and it's just not going to get fixed. With the current inventory of houses, prices are not really balancing. Yes, there are some markets where prices are starting to come down, and we see that. But on the contrary, there's some markets where housing prices are continuing to go up. There needs to be a main event that causes prices to go down and get us an influx of houses. And this is the event that could cause that. If you're one of the people cheering and hoping for prices to come down and the housing market to crash, you're going to want to see a large influx of houses hitting the market. And right now, the number one way to see that happen is if people lose their jobs and foreclose on their houses. Unfortunately for you, but not for the economy, that isn't looking very likely right now. As of last week, we saw a jobs report that added 250,000 jobs to the economy. And with people continuing to get jobs and change jobs to make more money, houses will continue to sell. Even more important though, houses that are already owned are not hitting the current market, as we already talked about. And the reason I say foreclosures are so important is because during the 2008 housing crash, we saw a ton of foreclosures. Based on this chart, you can see that foreclosures are increasing. But if you're going to have a crash larger than the 2008 housing market crash, we need to see a lot more foreclosures than the amount we saw in 2008. And right now, we're very, very far away from that. We need more houses than ever to hit the market and drive up supply, and that'll really decrease prices. But with foreclosure rates being this low and a really good jobs report, I just don't see that happening anytime soon. Make sure you leave a comment below though if you think there's going to be more foreclosures in 2023. So there's the data and facts I could provide you to kind of give you an idea of where I think the housing market's going to go. Do I think there's going to be a correction? Yeah, I do. I think it's going to be between 10 and 15%. I don't think it's going to be 50% like we're seeing on these clickbait titles. I just don't think it's going to happen. Obviously, there's a lot of facts to consider, and if you're making a financial decision, make sure you do your own research. Don't listen to people on the internet. Make sure you look it up for yourself and make your own decision. And finally, do what's best for you and your family and your financial situation. Not everyone's the same and there's no easy answers. So make sure you're trying to do the best for you and not what somebody else tells you to do. If you're looking for a great place to store your money risk-free while you're waiting for the housing market crash to happen, go ahead and check out the video you're seeing on your screen right now. Otherwise, make sure you like, subscribe, and comment, and I'll catch you in the next one.